Okay, picture this. The market's on fire. Silver is just ripping, hitting new highs, and everybody is piling in, convinced it's going to the moon. But what if the really smart money was quietly heading for the exit? In a move that made a lot of people scratch their heads, one veteran investor did the absolute unthinkable. He sold everything, every single ounce, right at the peak of the frenzy.
So you have to ask, why? Why on earth would anyone sell in the middle of a historic bull run like that? Well, the answer is this fascinating mix of cold, hard trading discipline and a really bold counterintuitive theory about where the world is actually heading. It's a story that comes in two parts, one about our own psychology and the other about geopolitics.
So here's how it all went down. This wasn't some kind of panic sell-off, not at all. It was a really systematic, disciplined exit. He started selling off his physical silver in chunks, or tranches, as the price kept climbing, hitting his preset targets at $90, $95, and then $100. And it wasn't just the physical stuff. He also dumped his silver mining shares and his silver ETFs. A complete, total exit from a position that was, by all accounts, skyrocketing.
Now, before we get into the really deep market analysis, the first reason for selling is, well, it's surprisingly personal. It all comes down to a very simple but incredibly powerful rule about the psychological weight of your own investments. See, it's not just about the numbers flashing on a screen. It's about the space that investment is taking up in your head. And this quote just hits the nail on the head. The investor found himself sitting at a beautiful dinner in a fantastic restaurant, and the only thing he could think about was the price of silver. That, right there, that was his signal. The position had gotten so big, so volatile, that it wasn't serving his life anymore, it was consuming it. And that rule is what triggered the decision to just execute the plan.
So, and this is absolutely crucial. This wasn't an emotional reaction. It was the complete opposite. He had a pre-set target price, a plan he'd made long before all the hype and the frenzy started. It's a lesson he actually learned from his father, who was a second-generation commodity trader. You buy when nobody wants it, and when it goes parabolic, you sell. You don't get greedy, you don't start second-guessing, you just execute the plan. Period.
But this story isn't just about personal discipline. It's about a much bigger and honestly more controversial idea. This investor believes that the common narrative, the story everyone's telling about why precious metals are rallying, is completely wrong. It's not about the dollar dying or runaway inflation. No, it's about something much more unsettling. You see, the truth is so often hidden behind the numbers. We all see prices rocketing up, and we apply these simple, backward-looking explanations. But what if the market isn't just reacting to the past? What if it's pricing in a very specific and deeply unnerving future? This is where that deeper thesis really comes into play.
So on one hand, you've got the common narrative. You've heard it a million times. It's all about monetary policy, the Fed, inflation. But the deeper thesis being presented here is that this isn't a monetary event at all. It's a geopolitical one. Gold isn't acting like stable money. I mean, its insane volatility proves that. Instead, it's repricing itself as the ultimate currency of conflict.
Now, what's really interesting here is the implication of that idea. Financial markets are forward-looking machines, right? They don't just react, they anticipate. So, if gold really is the currency of conflict, its current rally means the market is looking ahead and pricing in a significant increase in global tension. The question then becomes, what exactly is it seeing on the horizon?
This model actually points to a specific time frame, the year 2027. This is what the investor calls the dodgy year for world peace. It's the year that a lot of intelligence and military analysts have highlighted as a potential window for a major conflict, specifically around Taiwan. So, according to this thesis, the gold market today isn't reflecting the world of today. It's reflecting the world as it might be in 2027. That's a pretty sobering thought. By the way, if you're finding this analysis insightful, please take a moment to like, share, and subscribe to our channel. That way you won't miss what's coming up next. So with that in mind, this all begs an immediate question. If you sell your silver because it's run up too far and you believe this whole rally is secretly being driven by a conflict narrative, well, where do you put that money next? This leads us straight to the next overlooked opportunity. Assets that are fundamentally tied to this same geopolitical driver, but they haven't moved yet. The investor has a name for these, proxies for precious metals. And just think about it for a second. If the world is actually gearing up for a major conflict, gold and silver won't be the only things that become critically valuable. A whole range of other assets, technologies, and resources are suddenly going to become incredibly popular once the rest of the market finally catches on to this narrative. So what should you be looking for? While these proxies are currently cheap and overlooked for one simple reason, the market is still stuck on that old inflation story. A perfect example given is the price of high-performance memory. We've already seen it surge. And why? Because of the insane demand from AI. And AI is now absolutely central to modern warfare, to intelligence, to defense systems. The link is direct, but for now, it's still being largely ignored. All right, let's pull back from the market strategy for a moment and look at the ultimate philosophy that's driving all these decisions. Because beyond the charts, beyond the geopolitical theories, there's a fundamental question every single investor has to answer. What is the point of all this?
And this quote, wow, it just says everything, doesn't it? The entire purpose of building wealth is to live. After selling his silver, what did the investor do? He took a piece of the profits and went to a luxury spa in Italy. It's not about being Scrooge McDuck swimming in a vault full of gold coins. It's about translating that financial success into actual real-life experiences. This all leads to something he calls the ritual of profit. It's a simple, four-step process, but it's designed to keep you grounded. By systematically taking a piece of your winnings off the table to actually celebrate, you avoid that trap of falling in love with your assets and riding them all the way up, only to ride them all the way back down again. It makes sure your investments are serving you and not the other way around. And that brings us full circle, right back to that dinner that was ruined by obsessive thoughts about the price of silver. So we'll leave you with this question. Take a look at your own portfolio, at your own strategy. Is it a tool that's building you a better life, or has it become a source of stress that's actually taking you away from it? It's a question really worth asking.